how's it going? How's it going? It is I again, your boy TJ, and welcome to M5 Property Addicts. But why am I saying that? You already know that you are here at M5 Property Addicts. Well, you are here. Thanks a lot for tuning in. And today, like any other day, I've got my boy Christian Jansen. Christian, good morning. How's it going?
Great, thanks, and you, TJ.
Good, man. You had a good week?
It was fantastic. Nice and exciting. Got a couple of interesting transactions through, so life's good. And on your side?
Yeah, we're pushing. We're pushing, man. We're getting close to the end of the year. And as we push on into it, well, let's see what goes into it. So it's about closing the year and starting the year strong for 2022.
Yeah, this is a time for momentum.
100%. Christian, whilst we are at it today, I just want us to talk to a particular subject. And this might not apply to many people because I do think that a lot of people think that real estate is about buying properties in residential. However, there is more to it, right? There is commercial properties. And what I'd like us to talk to today is the step-by-step guide of buying a commercial property. As a funder, as someone like you, Christian, who is always looking for money for other people with the different types of bank, let us start defining what is a commercial property, because I think a lot of people actually don't know. There's many commercial properties out there, but let's maybe define that and let's jump into the step-by-step guide of how actually anyone who's out there sitting in South Africa or anywhere else, they can be able to apply for funding.
Yeah, so first and foremost, commercial properties are properties where business is conducted. That's the broad scope definition. And that then also gives room for commercial enterprises on residentially zoned properties. So it's not necessarily a property that's zoned for business or light industrial or other commercial purposes. It can also be a residential property where you, for example, have a house that you converted. You've got 12 rooms with 4 bathrooms. When the banks look at that, they will see it as a commercial enterprise as opposed to it being a residential property. So the nature of the use of the property is the first and most important point of definition.
I've worked with a bank, and within the banking system, the term commercial loan and the normal home loans, the two are different products. So when one is now coming through to you for this particular property, wherever it might be, Christian, what are the steps now? So I've got my property that I've gone to see. I've put it under contract, and I think actually we need to do a video around how do you vet a commercial property, because I think that's complicated for many. Because when you're going through to see a normal property, you can literally walk through it. But now when you're talking about a building with 20 units, how do you do it? That could be a little bit tricky. So once we are sticking to the conversation of today, step-by-step guide of how to get commercial funding. So you got your offer to purchase. What do I do from there, Christian?
So there's a much more comprehensive list of supporting documents that accompanies those type of transactions. And basically, if you look at it from the bank's point of view, they have 2 very important elements as part of their consideration. The first element comes down to the jockey, the person behind it. Do you have prior experience? Do you know what you're doing? So your personal CV is very important because they want to establish whether you'll be able to make this work. And then secondly, the repayment ability of that building. So a building with 20 flats will have a rental income, a rental roll. What does the cash flow look like? What are the cash flow projections? Do you have a budget? Do you have any indication as to the security behind the leases? I can delve into a good example there with a building that we just recently got approved by one of the banks for a good friend of mine. He's got 7 shops and 24 flats in the building. And one of the biggest questions that came back from all of the commercial banks to whom we started talking about this was, the duration of the lease agreements of the flats. Those were very entry level, so a lot of them were running month to month. And then also the duration of the leases of the commercial properties. With the commercial properties, we even had to go as far as getting letters of intent that they will extend their leases. So all of that factors into the security that the bank has in terms of knowing that the rentals will carry on. And in this particular case, this friend of mine is very well versed in normal residential property rentals. He's got a nice and established business in that. And his CV gave the assurance that the residential flats that are running on month to month is not a problem. We did, however, have to provide financial statements of his property management business to corroborate it. There's a couple of things that come in there. There's a lot more detail as opposed to the typical buy a property, is my salary enough? Can I afford it?
Christian, I want to speak to the point there where you mentioned the fact that the banks wants to know who you are. And to me, that question there, it drives in a lot of, I don't know, it scratches in my heart a little bit. And the reason why I'm saying this, Christian, is that I think a lot of us out there, and I'll put myself in the same box. I remember when I was starting off in property, I wanted to go and buy the building, and yet I'd never managed one bed, one bath, right? And it's because I could think that when I was employed, I was managing millions at the bank. So I'm thinking, well, I can manage this, right? So with your knowledge that you know now, whilst we're still talking about the step-by-step guide, because I think for me, this particular step is the most crucial step, where the bank, because the bank is not trusting the building. Anyone can go and buy that building, but they're trusting you, the person behind that loan. So if you can demonstrate the fact that you are someone credible, you're someone who's got the knowledge, and you're someone who's been educated. A lot of people don't want to go to school, right? They don't want to go to seminars, because all of these things are things that now starts adding up on your CV to say that I've attended this class, I've attended this class. So the bank can now see, oh, this person here actually has property management course. Oh, this person here, he went to this school for this and this and this. So they know what they are doing. So for that reason, you are now being seen very differently from Susan or from John, who he's got his degree and has never managed anything, has never been somewhere else. Already the banks will start favoring you because you are active within the property space, even though when you have never owned anything at all. So the bottom line here of what I'm saying is, ladies and gentlemen, once you start deciding to go into the game of commercial, the rules of the game are different. Now it's about you. Who are you? Right? And then the deal matters. What is the deal? And the two in collaboration, can they make this thing work? And the bank will then give you some money, right? I recently, Christian, I met up with someone in Cape Town, and this guy is trusted with a local bank there. And they kind of like just giving properties that have failed with other people. So instead of repossessing them, so they do repossess them from the old person, they give it to this guy, because for the last 10 to 15 years, he's been able to turn around properties for this particular bank. And they kind of like give him an open check.
Yeah.
And he goes out and he does this. And I was wondering, how do you get to be in such a position? And it's the skill that he has harnessed over the last couple of years. And I know I'm driving a lot onto this one. And a lot of people are wondering, so what does it have to do with getting a loan? It's got everything to do with it. Your skill that you have and your ability to do it. So that's the first thing. So in other words, Christian, what you're saying is everyone needs to go to school and you need to start small.
Yeah, and that school can be formal education or literally just school of hard knocks. Buy that first flat, fail horribly, learn the lessons. I mean, both of our prior mentors, rest his soul, he got beaten up by his first tenant, and it happens. But it's part of the journey, and that's part of how you establish yourself, because there are going to be points where you're going to be very uncertain. And if you don't have all of the certainty and the answers as yet, you can alleviate and address that by means of having a proper manager as part of your whole business plan to say, well, I'm buying this building. It's a lot bigger than the flats and houses that I've purchased up to this point, but TJ has the background. He's done it. So TJ is going to be my manager. And here is our contract. This is how we're going to do it. So, all right, Mr. Credit Manager, you're safe.
The other thing that I also want to add on there, Christian, in terms of just helping out there with the thinking, step by step. Sometimes you don't have the skill, but you can actually partner up with someone else who's got this huge CV, and all of a sudden the banks doesn't see that you don't have any form of qualifications. But that's not the point. That we are here. We are just giving you some solutions whilst we are talking about the step by step, because maybe you've put in an application at the bank and it's been declined. It's a good deal and you're wondering why. Maybe it's a skills issue, right? They're not just believing that you can execute it, right? Or you can manage their 10 million or whatever the amount it is. And I'm not exempted from it. Look, I've been looking for some deals that are around about a little bit 50 million to 100 million, and they are turning me down. They're saying, look, we can see what you're doing, but can you do something maybe a little bit smaller to 20? And I'm like, but I can do that. So in my head, I'm thinking I can, but obviously the credit manager on the other side is saying, well, this is a learning curve. You need to do it nice and slow. But now I can bring in other people who's managed bigger buildings before onto my team, be it a manager to employ or someone else to partner up with, and then that way the bank can be able to see me. So the point is, rectify that step first, right? Before you go to the banks. What is the second step? Oh, Christian, had someone told me before that in real estate, in property, there is paperwork, I would have chosen a different profession, but I didn't know. So I jumped into it and, oh Lord, the paperwork associated in real estate. I've got how many people now that support me on that? I've got 3 people now that support me on the paperwork. On applications alone, including your office as well. But why does the bank need all of these paperwork?
There's a lot more hoops to jump through.
Let's start from there, Christian.
So the supporting documentation per application will differ dependent on the use of the property. If it's an owner-occupied commercial building where you're just subleasing 2 offices, but you're in charge of the majority of the building, it's completely different to you buying a block of flats or you buying an industrial building that you're going to rent workshops out of. There's a couple of different levels of supporting documents. A good example is with student accommodation, you need to provide house rules, a security analysis to also just show how you're safeguarding the building. But the bottom line of it all is we need to paint a picture to that credit manager where we show them what exactly it is that we are hoping to achieve, and also how we are addressing all of the threats and the risks, and also how are we identifying all of the threats and the risks, because that's a very big element to it all. I mean, your typical SWOT analysis, your strengths, weaknesses, opportunities, and threats, that is very important with a commercial property finance application. And you'll occasionally find that the credit manager will come back and say, but hold on, you didn't even mention this threat. This is a red light to us. Or if we can very quickly respond with an answer, then they are assured. But the big thing is there's so many moving parts in a commercial application as opposed to your typical residential applications, which necessitates a much more thorough assessment. And that also unfortunately means that it takes quite a lot longer to get that approval through. I mean, you've seen in your experience as well, TJ. I mean, it can be anything from 4 to 8 weeks, dependent on the complexity of that transaction. So it's very, very important to get all possible background up front and have it ready to compile a complete application. So to that end, we've got quite a comprehensive checklist that we always issue out when somebody is looking at that.
I want to mention some of these things here from the top of my head. So we generally have, me and my partners, we all have trusts, and all of our shares are in a trust. So the bank says, well, we would like to have the trusts themselves, the letter of authority, and we want to see the shareholders' certificates, and we want to see the shareholders' agreement, and we want to see the MOU agreements, and they want to see the company itself that we are buying into, the company registrations, and they want to see the financials of the company, up-to-date management accounts, and then, oops, hold on. You all have trusts, so we want to see all the beneficiaries that are in the trust. We want to have the figures of all the beneficiaries in that trust. And then we haven't even touched the actual property. So those are 10 documents. And if you have 5 of you in a partnership, that's 10 times 5, right? So it's 50. And then they went on to say, okay, so this property here, then they say, well, give us a profile of you individual. Who are you? So now, you need to give a profile for yourself. And number 2, then the actual property itself. So what is it? The description of the actual properties. They want to see rent rolls, right, for each property. They want to see a contract for each contract. They want to see supporting documents of each contract. They want to see fire certification of the building. They want to see insurance for the building. If you've got any expenses that are running on the building, they want to see each and every expenses on the building. You got a caretaker. What is the caretaker's payslip? And Christian, I can go on, and it felt like I was stripping myself naked to these banks. And then eventually, after a couple of days, they approved it. And then guess what? They had conditions of the same freaking documents that I had provided in the first place. And I'm like, but we sent all of these and we need to resend them again. But the bottom line is that after a few ping and pongs and pings and pongs, it taught me something. Google is my good friend. Shared Drive. Yeah, Shared Drive is my good friend. I create all those folders, Christian. My team members, they go out, they create all of those folders. We create a folder for zoning certificate. We create a folder for any and everything that the bank is going to ask for. And we just send the one link to the bank via you. And some banks do take it. Some banks wants to see all the documentations.
You send me the link, I pull everything off and send it individually.
So you can hear from my frustration, bro. I remember one Friday afternoon and one Saturday, I think Rita and I, we started off around about 9. By 3 o'clock, we were literally sitting on a computer on the cloud. Where's this document? Put it there. Where's this? And then we said, I think it's time to hire someone who will have a lead and who will take like a finger on the pulse on where all this documentation needs to sit. Or else you're going to lose the transaction, right? But, ladies and gentlemen, you are very lucky. You don't have to go through the pains that Rita and I is going, because we have done this video for you. And I am also bringing in Christian into your doorstep, onto your phone, who can be able to already give you some of these guidelines. And for me, this is what this is all about. But Christian, What is the next step now? Whilst we're still talking about the step-by-step guide. So
Well, after you've after you've gotten all of your documentation together, your next step is that the credit managers will assess the property. So they will look at all of the cash flows, the budgets. It's typically a 24-month budget that you also need to provide. All of that gets put together, and then once they're happy with the numbers, they will, in most instances, ask for an authorization from your side to do a valuation. So with your residential transactions, you'll find that the bank sends out a valuer. They go out, look at the basic details of the property, comparable sales, and so forth. Very, very straightforward, as opposed to your commercial valuation, where they need to look at the cap rates in the area, they need to compare other buildings, and that comes with a cost. So there's a sliding scale of varying costs, and that cost is for your account, whether the bond gets approved or not, unfortunately. So there's a bit of an additional capital layout. But yeah, once they've done that valuation and they're happy with the value, then they will issue their approval letter. So that's the easier part.
I do know that for some people at this junction, they're going to ask, they don't have a one bed, one bath, by the way, but they're going to want to ask the question, how much does it take? How much is it to value the property? In my experience, anything from 5,000 to as far as 30,000, just depends on the type of the building. But people like me and Christian, we don't do that. You actually need an independent evaluator who comes out and evaluate the building.
The bank will nominate somebody for it. So you don't have to get somebody on your own. And typically with that also, there's a little bit of a discount because they get a lot of business from the bank. So they won't be as expensive as an independent valuer completely external to it.
100%. Whilst we're speaking onto that one, Christian, I also want to add on the fact that the valuator then now comes to your property, or the credit manager themselves at the bank, they decide to come out and see the property, which is something that when you're buying a normal, I don't want to say normal property, but when you're buying a residential property, you generally, the evaluator comes out, but the credit manager doesn't come out. And in my case, I've seen a credit manager coming out. And in one instance, the credit manager refused to come out of the car. And he says to me, well, we wouldn't go with this area. So I'm like, okay. But clearly, I'm sure you did see that this area is Florida when you left your workplace. And now you don't want to come out of the car, and you are in this nice building, And at one point, I felt intimidated by that. And I was like, this credit manager, I swear, like if he wasn't working for this bank, me and him, we would have been talking other things. But I just calmed myself and I said, well, maybe this is not a bank that sees the same vision as I see it. And the next bank came in the next day. The credit manager was very happy with the building. He gave me some pointers on what to do on the building because he came in with his evaluator to evaluate the building. We had such a nice time. In a week's time, they gave us the loan, right? So having said that, I almost want to say that in the process, it's also, you might get frustrated with the process. Because it's a step by step, right? Some things needs to start, stop, but some things needs to go in parallel with others. So for instance, the evaluation is not a stop and start. You send your paperwork, but the evaluation at some point is just gonna come in and run in parallel, right? But it isn't when you're engaging with with all of these bank people that are coming to your property. Christian, in your view, whilst we are on the step by step, in your view, right? Is it important for me, the landlord, to be there, or at this time, you probably don't own the property, right? It's being owned by the seller. Is it important for you to be there or not?
If you can, I would suggest it. If you've got an opportunity to also have a conversation with the valuer, it'll definitely help. Because in most instances, and I just look at the type of transactions that you also get involved in, it's not just about buying a building. about what value I'm going to extract out of that building by tweaking X, Y, and Z. And it's in most instances, even if though you put it on writing as part of the whole commercial financing proposal that we help you compile, it is an ideal to have that conversation with the valuer to say, well, listen, this is what we're buying. Yes, it looks bad right now, but these are our plans. And if you've got some schematics or something like that, it will more than likely make the valuer excited about it as well. Because remember, they've got a very interesting perspective on areas as well, where a lot of the guys look at some of your, I won't just diss any area, but they'll look at some of the areas and just say, gosh, if only somebody comes in and does this, this, and this, imagine what it will do. And we've got that power. The opportunities are there. So share that passion with them, and you'll definitely make them more excited about your vision and your project. And that may be one of the deciding factors.
Christian, you speak of a document that at one point or the other, when you're doing a commercial loan, you might, it's not a requirement on all the banks, but I've really seen the value of it. When you are submitting to have your business case or your business proposal of your project, and this here could be starting from introducing yourself, your company, the actual project itself, so the picture that you're talking about. And your office, Christian, you guys, you do that for a fee. So as a buying it, you will need to go out and do this. And what I've seen with the value of having this document is that not only will the proposal be able to help the bank, but it also helps me, the buyer, to understand how I'm going to turn this thing around, if I'm turning it around, or to understand the intricacies of it before I pass it on to the next person, so that when I pass it on to that next person, I'll be able to explain it much better. Do you want to jump into that? Because I don't see this in residential. In commercial, I see this document as a necessity in terms of having the proposal. It has come in with different names. What are the names does it carry?
Yeah, so some of the guys call it a bankable business plan, but from our side, we prefer to call it a commercial financing proposal, because we can't predict that it will be bankable on account of it. Yes, from our experience, we can look at it and say, right, this is a kite that definitely will fly, or no, there's no chance. But the commercial financing proposal ultimately best defines it. And that's also one of the proverbial elephants in the room when you look at distinguishing between commercial and residential financing. There's a raising fee that the bank is going to charge on successful approval of the loan. And our fee structure also allows for a raising fee because the banks don't remunerate us. So there will be fees applicable to helping you with the whole due diligence of it by means of doing that commercial financing proposal. And then the bigger fee will be on the raising fee side. But if it's going to kill a deal, obviously there is a little bit of wiggle room with that. I mean, we're not set on trying to just take money, and we focus on keeping it outcome based. But yeah, it's imperative. I mean, that financing proposal makes the world's difference. And we've had many an instance where a client comes to us and we start with the whole process and we look at that and just say, listen, there's unfortunately no real chance for this. It might be the economic climate, it might be the current bank's lending policies. Like as an example at the moment, don't even try to get a hotel, to build one or to buy one. The chances are less than zero, quite frankly, because the banks are set on saying, with the pandemic, there's way too many uncertainties. I even had a customer who worked for a casino who was declined because his industry is at risk. And that was on a normal residential bond. So you have to also look at what the prevailing market conditions will allow. And that's why we always invite a prospective commercial property purchaser to have a quick 30-minute Zoom chat with myself and one of our commercial specialists so that we can just hash it out before we even start with the entire process. But at that point, you have to have some cash flows, some indicative numbers available so that they can just do a quick, almost desktop feasibility to just say, yes, this may work, or no, we're going to need X, Y, and Z to make it work.
100%. So, you might be sitting at home and you're thinking, well, I can do this. Yes, you can. There's nothing that stops you together putting a proposal. You can go and put your proposal on your own, right? But Christian and his team, they do this every day, all day, all year round, right? And that's why I would prefer to give them the work. Why? Because they've got some intel that I'm not familiar with. They've got something else that I'm not aware of that is happening at the moment. And instead of me doing a try and error, I don't do that. I pass it on to the experts. And if I can work it into the deal, I'll work it into the deal, and boom, I get my deal. I start running. Christian becomes happier. We pay him his fee, and we get the deal, and it's done in a shorter period of time. But whilst we are talking about that particular document also, it is also important that it's not a one-man exercise. So I don't come to you, Christian, with my documents and I just say, yes, give me a proposal. There is going to be a few meetings to understand what is in here, to understand what is on the ground, and you then put it onto paper versus what is happening in the market, versus what the bank is looking for, and this is what I have provided. And now when you put it together, that's the magic document that goes into the system now, and that gives us the money. How many products, Christian, on the commercial side do you have on your books that you can literally take a commercial product, a commercial property today, once we have finished that proposal, that you can take to? Because I think for a lot of people, they just think there's 5 banks, and there's quite a lot of options actually out there. You have them all at your fingertips. How many products can you jump into?
Yeah, well, it will literally depend on the nature of the transaction as well. But I mean, you can go as wide as the NHFC for rental stock financing. You can go to Tough on inner city. The main commercial banks tend to be the cheapest of the lot from an interest rate consideration point of view. But you've got some of your boutique lenders as well, but they tend to charge premiums. And it's just a matter of establishing what numbers will work for you, be it a longer loan term, like Tough offers a 15-year loan, 80% at prime plus 3.5 as you start out, as opposed to the normal banks lending being 70% over 10 years, but at a much lower interest rate. They'll typically come in at prime plus 1. So it's all about just establishing what exactly the numbers allow, first and foremost, before you even start looking at to whom it goes.
Amazing stuff. I think we have gone through the length of this thing here. Any other closing comments, Christian, that you want to caution people, those that are going in for the first time? And because if you've done 1 or 2, you probably are aware now. But you're doing this for the first time. Maybe you've done 1 or 2 projects, and now you're going into the commercial space, or you're thinking of going into the commercial space. What would be your closing comments to say, guys, be aware of this before you even come to me? By the way, if you want to reach out to Christian, in the comments in the description below would be a link that you can literally reach out to Christian, and he can be able to support you. Your comments, Christian.
Yeah, so most important thing, if you're going to move from residential to commercial, you're going to have a lot more of control over the building, but that also comes at a cost. So when you run your numbers, make provision for all expenses. There are going to be more expenses. A couple of things may even be more expensive than what you experience it at as a single property owner, as opposed to a block of flats, as an example. So you have to make provision for those costs, and also make provision for the odd breakage or something that's out of the ordinary. because all of that will be for your account. You won't have any form of if it's sectional title as an example, you won't have further contribution from other owners. So you need to be very, very certain about the numbers first and foremost. If that's in order, you're more than likely good to go. And notwithstanding the fact that your management costs might be a little bit lower with a block of flats because you'll be giving more units to a rental agent, if that's part of your strategy. So, but it's just a most important thing is make sure that your numbers work and make sure that you build a buffer into those numbers for the odd eventuality.
Amazing stuff, Christian. Ladies and gentlemen, if this has been of help to you, in the comments, let us know what your thoughts are. What has been your experience with getting commercial funding, and where have you received commercial funding of late? Let us know in the comments below. And if you're struggling, let us know where you're struggling, in which areas and things like that. And Christian, he is here to help you. He helps me, right? You see the buildings that we are buying and things like that. He is helping us achieve that. If he can give us this kind of access and to the different banks, he can do the same for you. This is why we hang out with him. Christian, thanks a lot. Enjoy your week, buddy. And
Thanks, Taurai.
To all of you who are watching it now, we will check you out on the next video.